Welcome to the CBR Briefing. I'm Joseph Cox. In our economies where cost of living is already high and inflationary pressures remain stubbornly embedded, we confront a quiet and persistent form of economic inequality that rarely makes headlines, but perhaps it should. It's called the pink tax, and if you have never heard of it, chances are you have paid it or know someone who has. The pink tax refers to the consistent pattern of higher prices charged for products and services marketed to women, from toiletries to toys, from personal care to financial products. Crucially, it's not a formal tax, it's a market practice. And while most of the global data on this issue comes from large developed economies, its relevance to the Caribbean is far from abstract. Why? Because Caribbean economies are deeply integrated with global supply chains. We import 60 to 90% of what we consume, and that includes fast moving consumer goods, personal care items, pharmaceuticals, apparel, and even digital services. So when a razor produced and priced for the US or European market enters our shelves, complete with its gendered markup, that pricing gets passed along wholesale. There is no local offset, no Caribbean discount. Now let's talk about the data. A landmark study by the New York City Department of Consumer Affairs in 2015 reviewed nearly 800 products and found that women's items cost more 42% of the time. For personal care items alone, women paid on average 13% more than men. A 2021 UK Parliament report found similar trends, with women paying significantly more for items like deodorants, razors, and even in the child toys section, where pink-colored versions often came at a premium. Retailers often justify the markup by citing product differentiation, marketing costs, or assumed purchasing behavior. The truth is more uncomfortable. There's an embedded commercial bias that assumes women are more willing to pay for perceived value, even when the value is purely cosmetic. Indeed, let's be absolutely clear. The price disparities are not tied to production costs. A blue and pink razor typically have the same blade count, plastic composition, and shelf life. The only difference? Packaging, labeling, and perceived gender targeting. When we examine this issue in the Caribbean context, the implications are stark. First, women in the region already face economic headwinds. They are overrepresented in informal work, part-time jobs, and in caregiving roles that often go unpaid or underpaid. Female-headed households, particularly single mothers, make up a large share of the most economically vulnerable. So when the cost of essential goods for women is consistently higher, it effectively becomes a gendered penalty on consumption. Second, our regulatory environment offers limited protection against this type of pricing bias. Consumer protection agencies exist in most Caribbean countries, but enforcement mechanisms are typically geared towards fraud or substandard goods, not pricing inequity. There is no law in Barbados or Jamaica or Trinidad, among others, that says a company can't charge more for a product just because it's pink. Third, the ripple effects extend to services too. Hair salons and barber shops across the region routinely charge higher prices for women, even when the service performed is the same or less complex. Dry cleaning is another common example. Women's clothing is often subject to special care surcharges, while men's shirts are washed and pressed at a standard lower rate. While most regional banks no longer explicitly price credit differently by gender, anecdotal reports suggest that women borrowers, especially entrepreneurs, may still face disparities in access or terms, particularly when informal collateral or spousal guarantees are introduced into the equation. Some may argue these differences reflect real distinction in service delivery, and sometimes that's true. But more often than not, it's a default practice with little grounding in cost structure and everything to do with gender-based assumptions. So what can be done? At the policy level, Caribbean governments could take a cue from international examples. In 2020, California passed a law banning gender-based price discrimination in services. France has imposed restrictions on gendered pricing in retail. Here at home, consumer affairs agencies could be empowered to conduct pricing audits, especially in supermarkets, pharmacies, and service sectors where price gaps are most entrenched. From a business perspective, retailers can take voluntary steps, conduct internal audits, neutralize branding, or create gender-inclusive pricing standards. Companies that position themselves as progressive or community-minded should consider whether they are, knowingly or unknowingly, penalizing their female customers. But ultimately, awareness is key. Consumers, especially women, need to be empowered to question price differences compared across gendered sections and challenge unfair markups. Because in the Caribbean, where every dollar stretches just a little less, these invisible surcharges are not just unfair, they are regressive. They deepen inequality, penalize economic agencies, and chip away at the hard-won gains in gender equity. So the next time you're shopping and you see two identical items, one pink, one blue, and the pink one costs more, know this, it's not just a pricing decision, it's a statement. And it's one that we can and should push back against. Now, this is the CBR Briefing. I'm Joseph Cox. Join us next time as we continue to explore the economic undercurrents shaping life across the Caribbean.